Okay, so let me just put it in here. So let's call it bank. So bank A, and so he's got stop loss orders to buy, let's say, to buy 150 million at 1.0525, and that's from his retail brokers. Okay, so that in itself, that's not it's not a large amount of money. Market is quite easily able to cope with that. He doesn't have to worry too much. Then his also of a lot of interest here. Excuse me, options books. Option players trade. While they're trading their gamma, they trade inside the range, and once the range breaks, then they need to switch their hedging a bit. So you look at these are the options traders. Options traders, once again, they're all looking at the same level, and they've got, they want to buy. Now remember, these guys can be quite big, so they're, a total of buying, say, 620 million at exactly the same level, 1.0525, right? Okay. Sorry. Oops. Sorry about this. Excel is driving me mad. Okay. Anyway, let's say the amount is 620. Okay, so we had here 150, here the 620 from the options markets. Then we look at hedge funds. Now, and remember back to our structure, we had like real money funds and sovereigns. They normally don't put, I've never known a sovereign to put a stop loss order in the market. That's just not the way they operate. And they're always buying dips and selling rallies. I've never known them to trade a break. The retail space, we've got options traders, and then we've got hedge funds. Now, the hedge fund positions could be massive. Literally, the big global macro funds, if they're playing one particular pair, they could have, a $10 billion position. Now they're not going to. They're clever enough to not stop all of that out at the same level, and they're going to realize they'll just drive the market crazy. But let's say they're short and they need to buy $1 billion on stop at all at the same level. So we've looked at the chart and we've seen this big level, 105.25, and Bank A has got basically 1.6 billion to buy on stop if it gets there. Now, this is a problem for him. He's thinking to himself, okay, if something happens, the market starts to gap higher, and it suddenly touches 105.25, and I have to buy 1.6 billion, what's going to happen? The market is going to gap. Without a doubt, the market will gap higher. He may be lucky and run into a major source of liquidity at that level, but more than likely, he's also looking at the charts, and he thinks to himself, ooh, that could be just fresh air. We could have hit a vacuum, an air pocket. Exactly, we could hit an air pocket just at that level. So he says, what am I going to do? Now, let's say the market is currently trading 104.75. So he sat down, market's trading at 104.75, and he's got all these stops. So what he does is he calls his mate in Bank B, and he says, oh, what are you hearing? He's not going to tell him straight away what he's hearing, but, there's a little bit of, what's the word, playful, trying to find out from the other guy what he's got without giving away too much information. But basically, let's say Bank A finds out that Bank B, who's around about the same size bank as he is, has also got stops at the same level. So he's guessing, ooh, that could be another billion there. And then there's Bank C, D, E, F, and G, and whatever as well. So he's starting to get a little bit worried. He thinks to himself, okay, it's not only my 1.6 billion. I am looking at a bit of an extreme example here. The amounts could be, probably, quite different to this, but it is possible. So Bank B has also got stops, and then we've got C, D, C, D, E, F, whatever, E. So you could have here 6 big banks, adding up to a total of, I don't know, you're guessing there could be $5 billion worth of stops above 105.25. Now, if If the market gets to 105.25 and suddenly these 6 guys start to buy 5 billion Aussie, where's it going to stop? I don't know. I'm guessing here maybe 105.80 if you're lucky. That's where it's going to stop. There will be an air pocket. It will gap, and it will go very fast. So this guy, let's look at Bank A. He ends up buying his 1.6 billion on average, if he's lucky, at 105.75 in supposedly normal market conditions. Now, you were one of these guys. You had your 1 million Aussie dollar short position with a stop at 25, and your retail broker comes back to you and says, "Oh, you've been stopped out at 75." How are you going to feel about that? I can guess. I can hear the screams of derision already. So yeah, you're going to be pretty unhappy about that. And the sales guys who are talking to the hedge funds, they're saying to their dealer, "You can't do this to me. You can't fill these guys here. These are our best customers. We earn a lot of money from them. You can't do this to us. You need to fill it at a better rate." Anyway, it is a huge headache for this dealer. Okay, so he knows this in advance, so he's got to do something about it. Now, just to make my math easier, let's presume that he's got $1 billion worth of stops at 105.25, just to make my maths easier. He sits down. The market is trading here, 104.75. So he's going to do something. So he says, "Okay, I'm going to buy 20 at 1.0476." Okay, so he's now got a position. He's 20 long at 104.76, and he sees what happens. Market starts to tick a little bit higher. It's pretty quiet, but it's moving a little bit. It's now trading 80.81. Okay, so he says, "Okay, I'll buy 35 at 1.0481 and see what happens." So he's now $55 million long, 104.79, this right here, and it is starting to tick a little bit higher. So he says, "Oh, I'll trade it a little bit." So he sells 5 at, I don't know, 1.0489. Yeah, so he's feeling his way around the market, trying to figure out what's going on. Remember, he's 50 long. Then he starts hearing from some of his other mates, okay, it's getting, it's now trading 94.95, 95.96, and he hears there may be more stops above the figure. Okay, so he decides to have a punt. So he buys 100. He's going to try and drive those stops. It's trading 94.96. He buys 100 on average at, say, 99. Yeah? He's 150 long at 104.92. The market breaks above the figure. Okay, so it gets above 105, and now these stops over here at 105.25 are starting to become, it's getting closer. So now he's starting to get a little bit worried. He still continues to trade it a bit. He sells 10, like, I don't know, 1, 5, 10. Remember, he's got some risk here. If suddenly he's sitting $140 long at 140.90, and something happens, some bad news comes out, the market could just gap lower, because not only he's long, he's probably long 140. Remember, these other guys are also long 100, probably. And this market is going to start gapping lower quite quickly if bad news comes out. So it's not risk-free. There is risk involved for the dealers. But we're looking at a normal, run-of-the-mill type market here. Everything is going according to plan. Market is still hanging around 105.10. Remember, he's only got 15 pips to go before his big stop loss. Everyone's starting to get a bit nervous. He's 140 long. It is trading 11.12, and he thinks, okay, I'm going to go for this. So he buys 200 on average at 1.05, 14. Yeah? These guys are now starting to panic. The first guy in gets, he's going to have a big advantage. $340 long this trader is, and he's running a huge risk. 340 million, that's for every 10 pips that it moves is $340,000. So if the market suddenly gaps lower, he could be out of a job. So it's a risky, it's a risky thing to do. But you don't think about that in the heat of the moment. All you can think is, I've got $1 billion worth of stops. I've got to trigger them. Now this is the crux of the issue. He needs to trigger those stops, or either he could end up losing his job, or it could drop off a little bit if he doesn't get them done he gets stopped out of his position, and then it suddenly gaps up. So not only does he lose money, but also there's major slippage on the stops later on during the day. So a lot of downside that he can see. I know, from an outsider's perspective, it seems that it's just pure greed, but he's just trying to do an efficient job. I'm being probably a little bit overly fair to the interbank dealer, but it's just not a cut and dried thing where he's trying to stuff everybody. It's just not. It's just the way the market is set up, and he is trying to ensure that the liquidity goes through the market in the most efficient manner.